but we'll get officially started with the Paycheck Protection Program 2.0 Eligibility and Application webinar. My name is Karina Paredes Arzola. I'm the program manager at the California Association of Nonprofits, Cal Nonprofits for short.
Thanks, Jen and Karina. Hi, everybody. Welcome. And to take two of our Paycheck Protection Program 2.0 Eligibility and Application. Just before we get going with our SBA expert, who I'm going to introduce in just a minute, I just wanted to give a little bit of background information about the broader lay of the land for federal and state relief programs. I know that it can be really confusing. There are some of the same players, but there are different eligibility requirements. So I'm going to go very broad strokes here, and I know that Julie, our SBA expert, is going to go into a little bit more depth. The focus, though, of our webinar today is going to be specifically on the PPP 2.0, so the current round of the Paycheck Protection Plan. But as many of you know, the CARES Act last year funded a first round of the Paycheck Protection program, and it closed in August, so you can no longer apply for it, although I know that a number of people who received a loan are still in the process of working on the forgiveness portion of the loan. These are forgivable loans. You have to meet the requirements for forgiveness. It was a first come, first serve. There were a number of rounds of it. And you have to work with the lender. So that's a key aspect of this. It is administered by the United States Small Business Administration, the SBA, but you work with the lender on that. The second round, what we're calling the PPP 2.0, is funded by a new federal act that was just passed in late December. And that's what we're going to focus on today. So I won't go into that one, but it has already opened, and the application process is open already. It started in January. Then there's another federal program also administered by the US SBA, and that is the Economic Injury Disaster Loan Program that received, there was a pre-existing program, but it received additional funding last year. That is a loan program that last year had also a cash advance portion to it. And there will be another version of that program coming. It's still in development. So stay tuned for more of that, but those are loans where the bulk of the loan is not a forgivable loan. And then the third program that I know many of you are hearing about that is also still in development, but I wanted to mention, is the Shuttered Venue Operators Grant Program. Also got funding from that same federal act that was just passed in late December. And we aren't going to spend a lot of time on that program, but we will take some of your questions just about how it dovetails with the PPP 2.0, just to make sure that you all can make the best decision about which program to apply for as we go forward. Now, as we said, it's still in development, so we don't have all the information available quite yet on that program. But there is going to be a webinar happening on Monday, and one of my colleagues will put the link to that webinar in our chat box so that you can register if you like. It's being put on by the Californians for the Arts, and they will share whatever official information they have from the SBA by Monday at 3 p.m. when that webinar happens. Then so those are the federal programs, the key federal programs that are administered by the Small Business Administration. Then I also just wanted to mention the state program, because I know there's been also a lot of confusion between the state program and the federal ones. The state program is called the California Small Business COVID-19 Relief Grant Program, which is really a mouthful. It is administered by the State Office of the Small Business Advocate, and it has state funding. The first round of that program was completed on January 13th. There will be a second round starting February 2nd. That one is not a first come, first serve program like the PPP. They are looking at a range of criteria to award those grants. And we're not going to focus on that today. We are going to focus primarily on the PPP 2.0, but I just wanted to let you all know so that you can keep in mind these distinct programs. And with that, I'm going to turn it over to Julie. I did want to let you all know we will be taking questions throughout the webinar, and also hopefully have some time for more questions at the end. So do, again, remember to put your questions in the Q&A box, and I'll be looking at those and getting to as many of them as I possibly can. So with that, I want to introduce to you all Julie Klaus. She is the District Director of the Small Business Administration San Francisco District Office. So Julie, I'm going to turn it over to you.
Thank you, Lucy, and thank you, Jan. And thank you again for, the dress rehearsal yesterday and the main event today. So my apologies to people who did dial in yesterday, and I was having technical issues with Zoom, but today, fingers crossed, everything is going to sail smoothly and we can provide you with the information. So I thank you again to Cal Nonprofits for rehosting this webinar. And we have a lot of information, so I'll try to, if we can advance at least one more slide. Yes. But before we dive into the guts of this presentation on PPP, I do want to kind of build off of what Lucy was talking about with the other programs, just so that you're aware of what's out there. I always think it's a good idea to understand what all your different options might be so that you can make the best and most informed decision for your organization. PPP certainly has gotten, the lion's share of attention, but it's not the only thing out there. And for many organizations, it's often not even the best fit given their particular financing needs. So let me just quickly go through some of these, and then we'll jump into the deeper dive on PPP. So there's two kind of buckets that I put the SBA assistance, COVID-related financial assistance in, a debt deferment and relief bucket, and then a loans and grants bucket. So first, talking about debt deferment and relief. As a nonprofit, you may have been the recipient of prior SBA disaster funding, and I'm talking pre-COVID, so maybe because of a wildfire or some other natural disaster. If you have an existing SBA disaster loan, your payments are being deferred. They were deferred last year, and that deferment is continuing for at least 3 more months, and that's happening automatically. We also have an SBA debt relief program, although because most nonprofits are typically not eligible for our core programs of 7A, 504, and microloan, I'm not really going to talk about that. But if anybody has questions, feel free to reach out to our district office and we can talk you through that one. But let's look at the loans and grant bucket because these programs are available to nonprofits. So the program that's been around the longest since March of last year is the Economic Injury Disaster Loan, or the EIDL program. And this is a working capital loan that is available to small businesses and nonprofits who've been impacted by COVID. It is a loan, as Lucy said, so it does need to be repaid, but it is offered on favorable terms. For a nonprofit, it has an interest rate of 2.75% over a 30-year term. They're all automatically getting 30-year terms. So it's a very affordable debt. And unlike PPP, which is a more narrow focus, this is a working capital loan, so it can be used to cover all the different types of business expenses you may have. So if you have not yet applied for that program, it is something to consider if you're needing working capital. I'm going to save PPP obviously for the big ups, but if we go into the next slide, I believe I have a little bit of information on the targeted EIDL advance. So this is taken directly from our website. That's always the best place, sba.gov, to get the latest information. So the targeted EIDL advance grant is different. I call it maybe a sibling to the EIDL advance that was offered this summer. The legislation created this program, the Targeted EIDL Advance, which is still a grant of up to $10,000, but the eligibility factors changed a little bit. So it is going to be targeted for businesses and nonprofits in low-income communities that can demonstrate a 30% reduction in revenue over an 8-week period. This program is going to be launched in phases, and so I do want to direct people back to the website for specific information. If you applied last year for EIDL and maybe you got a partial EIDL advance, you may be messaged by SBA asking for additional information to see if you qualify under the parameters of this targeted EIDL advance. Likewise, if you applied for the EIDL advance and the EIDL loan and the funding had already run out, you may also be messaged to see if you qualify for this targeted EIDL advance. So as of right now, there is no application process available to you. The program is still being worked on by SBA. And if you were an applicant last year for the EIDL advance, you will likely receive direct messaging from SBA about this particular program. So the next slide, please. This one is talking about the Shuttered Venue Operators Grant. That one is always a mouthful for me too. Shuttered Venue Operators Grant. This one is also not open yet. It is still in development stage. This is something brand new. So this is not a repeat program or an additional if funded. This is brand new. And it is going to be a grant. So that means it does not need to be repaid. It's a grant of up to $10 million for each applicant, qualified applicant. These are live venue operators, promoters, movie theaters, zoos, aquariums, museums, and different kinds of venues. So we're still waiting to see more detailed criteria and more detailed definitions of what some of these terms like promoter will include. But there is some information available on our website now. So again, I want to direct you back to sba.gov or to some of the webinars. We do have an archived webinar from last week available as well. The one thing that is on the website though is a kind of a formula about how to calculate how much you may be eligible for under this program. So typically speaking, it's going to be a grant of up to 45% of your 2019 gross revenue, again with a maximum of $10 million. So but there's calculations and samples on our website, so you might want to take a look at those to give you a rough idea of how much you might be eligible for under this program. And again, this is to support your normal business operations, expenses. That can include payroll, but it can also include your other normal expenses.
Julie, we have a lot of questions about how the PPP 2.0 and the Shuttered Venue Operators Grant, kind of how they work together. And right. My understanding, could you just walk through that around whether you can apply for both and whether you can receive both?
Right. So I know there's definitely some confusion because you can apply for PPP and EIDL so long as you don't use them for the same purposes at the same time. But unfortunately, with the Shuttered Venue Grant, Operators Grant, you cannot apply for the Shuttered Venue Operators Grant and PPP at the together. So if you, the cutoff date they're using is December 27th of 2020. So no one can apply for PPP and the Shuttered Venue Operators Grant between December 27th moving forward. So if you applied for PPP last year in 2020 and were successful, that's okay. But moving forward, December 27th forward, will not be able to apply and receive both of those. And so as it stands today, if anything changes, of course, we will let everybody know.
Great.
Thank you. Okay, so let's move into the meat of today's presentation, the PPP presentation. We can go one more slide, please. And then, well, keep going. Yeah, today I'm going to just kind of go through the nuances of the program, some definitions and eligibility, and then some of the applications, and then we'll talk a little bit about forgiveness at the end as well. So if we can go to the next slide, you'll see that this program, this is a list of the dates, but as you see, as of today, as of January 19th, officially, the program is open to all participating lenders, and it is open for what we're calling a first draw and a second draw loan. So this is new terminology, so I just want to take a minute to define that so that we all know what those mean. First draw PPP loan, we're referring to the first time someone applies for a PPP loan. So for some people that could have happened in 2020, or for others that have never applied, today, if they want to apply, this would be their very first PPP loan. That would be their first draw. The second draw then just simply refers to people who have already received the first draw and are now looking for their second PPP loan. So this is the second application. So you can see from the slide, we initially had a phased opening, but this week it is open to everybody and to every participating lender. So I did want to take a minute to just kind of describe the process. So as an applicant, what you need to do is select the lender of your choice. And everybody who participated in the first round is eligible to participate in this next phase, I guess, of PPP. Some lenders may have opted not to, but we're finding that most of them are continuing to participate and accept applications for PPP. If you're struggling to find a lender, you can always reach out to your local district office for some advice. You can also go to sba.gov. We have, excuse me, 2 different tools that have been launched. One is called Lender Match. Excuse me. And that will help you locate a PPP lender by answering a couple of questions, including your geographic information. And then there's also a PPP list of participating lenders. Again, you can search by geography using your zip code. So those are 2 tools to help you find a PPP lender if you don't already have a banking relationship with somebody who's offering PPP program. So you will go to the lender. Oh, sorry.
Oh, sorry. Keep going with. I have a couple of lenders questions, but you're still talking about.
Okay.
So keep going. Sorry.
So yeah. So the way the process is going to work is you're going to go to the lender of your choice, and you're going to complete the application. I will note there is a unique application for first draw PPP loans and a unique application for second draw PPP loans. Those copies of those applications are available on our website. Some lenders are accepting paper applications. Some have automated the process and will have like an online portal where they want you to answer the questions and fill out the information. The information is identical regardless of which process. So go to the lender, complete the application in whatever format they want you to, submit some supporting documentation, and then the lender is going to do a review and do the eligibility check and some other things. And then if the lender decides it qualifies under first or second draw criteria, the lender then is going to forward that information to SBA. What's a little different from this past summer is that at that point in time, SBA is going to actually do a verification check. They're going to verify the identity of the business, of the organization, and do like the quick check on the front end. So what that means is the lender is not automatically going to get an approval from SBA with a loan number. It's going to take a day or 2 or more because there's going to be a little bit of delay. So what SBA did is just kind of rearrange the process. So instead of doing the verification on the back end, we're doing it on the front end. So I do ask for a little bit of patience. Your lender, once you submit, is likely going to need several days before they can confirm that the loan is in the SBA system and they can go forth and disperse the funds.
Julie, you mentioned the lender matching program, and we had some questions about that. Just gives applicants a list of possible lenders. They still have to proactively reach out to those lenders, right? Is that how it works?
Yes. It's never a guarantee of funding. What it is kind of a way to put yourself out there to the lending community and say, hey, I'm interested in this case, a PPP loan, check that box. And then lenders can come back and say, hey, yeah, let's talk. It's kind of just an expression of interest.
And if they don't hear from a lender, then should they proactively, after they've done that lender matching process, should they proactively reach out to the lenders they've been matched with? In other ways?
Yes.
Okay.
Yeah,
right.
there should be a way to communicate. And if you don't get a match, again, don't be discouraged. This is, for the Paycheck Protection Program, everything is moving fast and furious, right? So I wouldn't take that as to mean nobody wants to do business with me. I would just take that to mean they're all really, really busy and maybe not answering the matches as rapidly as they do in normal times. So You can still continue to look for other lenders. Like I said, there's such a myriad of lender opportunities. We've got the CFI communities. You can see who those are on the screen. We have online lenders that have never participated with SBA, but they're now participating in a Paycheck Protection Program. We have your traditional banks. We have credit unions. We have all kinds of financial institutions.
So now for folks who are applying for the second draw, and I know we're going to talk more about the second draw, if they have not heard from the lender they worked with for the first round of PPP, should they also be proactively reaching out to their lender?
Yes, I think it's safe to potentially assume that the lenders are not necessarily going to reach out to their borrowers who got the first loan to check if they want a second. I would say it's incumbent upon you to make the first step, if you will, and to reach out to that bank and say, I'm interested in the second PPP loan. I think I qualify, and make sure that they're still offering and participating, and to complete the application, whether it's online or in paper.
Thank you. And then I know we've got the March 31st end line here, deadline for the program, but we have some questions about how much funding is in the current PPP 2.0, and is this a first come first serve program? So
Right.
if you could just address that, that would be great.
Yes. So it is first come first serve. It is open till March 31st or until the funding potentially runs out. If that happens sooner than March 31st, I should have double checked. I think it's 280 billion. I should have double checked.
Okay.
That was my fault.
We'll check later.
Yeah. And that's as of today, right? So we know that there's still some talk with Congress that they want to do more and offer more programming, and I'm sure that type of programming is going to run the gamut. So whether or not they put additional funding into the Paycheck Protection Program, we'll all wait and see. But as it exists today, yes, the program is open until March 31st, or until the funding runs out, whichever comes first.
Okay. And you mentioned also 2 application forms and processes, one for the first draw and one for the second draw. Now, there is no distinct application form for nonprofits specifically, is there?
Correct. It's the applications are only unique to whether it's first draw or second draw, not to the type of business. Yeah.
Okay, good. All businesses apply for either first draw or second draw using that application.
Correct. The process is the same. Where you might find some variances are with the types of supporting documents you might be providing, and how you do your how you do your calculations. I'm going to try to walk you through a little bit of that towards the end. And I wanted to point out, we do have 2 guidance documents that are now available. One that ties to the first draw and one that ties to the second draw. And I always tell people there's a ton of information out there, but if you look at nothing else, look at these guidance documents, because they really do kind of break down how much you're eligible for, how you do the calculations, where you can go grab information from tax returns or from other sources. And then it also tells you what kind of supporting documents you might need to supply to the lender as well to help back up where you got those numbers. So they're organized by different types of business. So there is specific examples for nonprofit entities. So, and again, they've one unique to the first draw and the one that's unique to the second draw. And so, especially when we talk about the second draw, I'll point out some of the nuances for nonprofits that you'll want to pay attention to. But I definitely recommend you go download those documents to have as a good reference tool for you.
Okay. Now, can somebody applying for the second draw use a different lender from the one they used in the first? Okay. And is it up to the applicant?
Yes, as the applicant, it's your choice of participating lenders. So if for any reason you decide you want to use a different lender than you used for your first loan, you may do so. I would be prepared though to make sure you have all those first round documents, because the new lender might ask to see them, because obviously they don't have the history with you and they don't have that information readily available. So, but yeah, you may absolutely go to a different lender.
Okay, great. And an applicant should just work with one lender, correct?
It is my recommendation, because what we found in over the summer during the last round is that sometimes people did go to multiple lenders because of this first come first serve nature. They wanted to see who would process their application the quickest, which is understandable. But what we're finding is that I've had some people apply to as many as 8 different banks. And it was the first bank to get through the SBA system that was, successfully awarded the loan application number. And then it blocked every other bank. And if the bank that got approval through SBA was not the first one to communicate with the borrower, it sent the borrower into a lot of confusion and chaos, because they think they got declined. Because once you're in once, because it's only one, you can only get one loan, whether it's your first one or your second one, but you can only get one in each cycle. So that we will block all the other applications from coming through. So we had a lot of businesses that were scared that they got declined when they really didn't. They just had to figure out which of their lenders actually got in first. So yeah, so it does create a little bit of confusion if you apply at multiple lenders. So, okay. So the other thing I want to point out too, we can go to the next slide as well, is that this time around, whether you're in the first draw or the second draw, you can use your 2019 or your 2020 data. So whichever is most advantageous to you. So a lot of the examples you might see might only reference 2019, but do be aware that you can use 2019 or 2020 payroll data, whichever, again, is going to be most advantageous to you.
Along those lines, Julie, sorry to jump in again. Yep. We had one question where a lender has been asking for 2020 tax return or 990, and folks don't have those yet. So do you have any suggestions for that?
Right. If what you might want to do is, even though you haven't, didn't have to file it yet with the IRS, you might want to go ahead and complete at least a draft version of your tax returns so that you have the draft available, because they can ask for that information. So I would recommend that, not only do you at least have a draft of your financials for 2020, but also have you might want to go ahead and do a draft of your form, your 990 as well.
Thank you. Knowing
that it can change, but at least it's a jumping off point to give the lender. So yeah, so if you had already applied for your loan in 2020, that's great. If you're just now applying, that's okay too. I wanted to talk about this. This is kind of universal, that cuts across first draw and second draw, but we have expanded the type of entities that are now eligible. And we've also expanded the type of non-payroll expenses that can be included. And we still have this concept of a covered period. And what that covered period means is, from the date your loan is dispersed to you, you have anywhere from 8 to 24 weeks to use those funds. And that's considered your covered period. So 8 is kind of the minimum, 24 is the maximum, or it can be anything in between whenever you use up the funds. But that's the definition of your covered period. So that concept still exists. And the expenses that can be included now, so this is the payroll costs and the non-payroll costs. So we still have, if you want the loan forgiven, which I think everybody does, you still need to spend at least 60% of the loan proceeds on payroll costs, and no more than 40% on the non-payroll costs. The payroll cost bucket has largely stayed the same. So it is the compensation to employees, including yourself as the, I guess in the nonprofit world, you're not really the owner, but the CEO or executive director, and the employees, with a maximum of $100,000 per employee. You can also include any sort of benefits that might be paid out to employees, like health insurance premiums that you incur, other kinds of fringe benefit programs. And then you can also include state and local taxes on compensation. And all those together include the definition of payroll costs. The non-payroll cost definition has expanded. So we still have rent, utilities, mortgage interest, but we now also have operational costs. And by operational costs, we're talking about the things you need to operate your business on an ongoing basis. So if you use a payroll provider, for example, you can include that cost. If you have a software program you need to subscribe to operate, you can include those costs. HR, maybe that you outsource as a function, can be included. Operational expenses. Similarly, supplier costs can now be included. And this is, again, for your ongoing kind of ordinary expenses. The other thing is worker protection. If you need to buy PPE for your employees to be able to safely coexist in your office space or wherever you are, if you need to erect physical barriers or do other sorts of precautions in order to be compliant with health department and other concerns because of COVID, you can include those costs. And then property damage. So if anybody had any physical damage to their property as a result of the disturbances and civil unrest from this past summer, those kinds of expenses can also be included in non-payroll expenses right now. But again, please be mindful that to have your loan forgiven, you still have to have this 60-40 split. So you can't spend more than 40% of your loan proceeds on all of those items.
Julie, can you explain what you mean by supplier costs, please?
Sure. This is kind of your ongoing and ordinary expenses. So if you're like, I probably don't have any nonprofit restaurants, but that's always like the easiest example,
right?
Have
a nonprofit example, that would be great, but it's
okay. I know. It could be something as simple as you have, office supply store that you're getting regular shipments to, paper and stuff to support your operations. So these are kind of the routine and recurring things that already exist. Like you can't now go out and contract with something new necessarily, but if these are ongoing existing supplier relationships that you have, they can be included.
Great, thank you.
But again, be mindful, people, it's only 40%. So I'm sure you have way more. those expenses would probably add up to way more than 40%, but to stay in the realm of being forgiven, you'll want to be mindful of those costs. And you certainly probably won't be able to cover all of those expenses with the PPP loan, unfortunately. But okay, I want to go to the next slide, which is going to talk more about eligibility. And this is where, if we were in person, I think people would be applauding, especially this group, because the expansion of the eligibility is expanded to include a lot of nonprofit organizations. So everybody who is eligible under the PPP program this summer continues to be eligible. So all types of business entities, sole proprietors, independent contractors, the 501c3s and the 501c19s, but we've also added 501c6s. And we've also added some different types of cooperatives and other organizations, which are largely nonprofits as well. So cooperatives, you'll see housing cooperatives on the screen, but we also have included electrical cooperatives and telephone cooperatives. We also have destination marketing organizations. And I know most people are like, what is that? So I thought it's easier. I tabbed it and I'm just going to read it to you because it is a very lengthy description. But this is what is in the rule. And it can be a nonprofit or it can be a quasi-governmental organization that is engaged in marketing and promoting communities and facilities to businesses and leisure travelers through a range of activities, which include assisting with the location of meeting and convention sites, providing travel information on area attractions, lodging, accommodations, and restaurants, providing maps, and organizing group tours of local historical, recreational, and cultural attractions. So it's any of those organizations, and they can be structured again as a nonprofit, or maybe it's a quasi-governmental agency. And again, there's a lot of detail in the rule. So if you are someone who fits into this category, I would recommend you go read the lengthier description in the rule so that you can see if there's any caveats or things that might apply or not apply to your specific organization. The other bucket is the news organizations. So these are typically organizations, again, they can be nonprofits that have a NAICS code that starts with 51, and it's usually like broadcast and some other news organizations. Now, for everybody in this category, you do have to comply with the size standards. You know, you do have to be a small organization. And the size standards are roughly, you know, considered to be 500 employees or less, or fitting with the SBA size standard, which we identified by NAICS codes. There are a couple caveats that I want to point out, and in particular, housing cooperatives and destination marketing organizations, their size standard is capped at 300 employees or less. And then any organization must have been operational as of February 15th of 2020. So
I just want to clarify, because some other programs have a revenue cutoff. There is no maximum revenue, annual revenue for the organization cutoff. It's based on employee count, not revenue, correct?
Right. If you really read the rule, there's actually multiple ways they can qualify as a small business under our size standard. So there's the traditional way, which is looking at by your NAICS code, you look at SBA's table of standards. Some of those are revenue-based and some are employee-based. You'll find the revenue ones, though, well, all of them tend to be very generous. Or it's 500 employees or less. And then there's also an alternative method, which is a little bit more complicated, so I wasn't going to get into it today.
Okay.
But
yeah. When counting employees, I think it would be helpful for first-time applicants if you could just say who counts as an employee and who does not count. That would be really helpful.
So usually they count it by FTEs. So I'd have to go back and actually double check in this rule to make sure they haven't changed anything or altered it, but I don't believe so. It's usually the FTE.
And independent contractors do not count as employees, correct?
Correct, yes. For purposes of this program, independent contractors are not employees because they are eligible, as you can see, in their own right to apply for a PPP loan. So they don't want to have the double dipping, them counted under one, under somebody that they're working with, and then also getting financial assistance on their own. So unfortunately, independent contractors are separate. And that's where I tell people, well, what I talked about in the top of the hour is that it's really incumbent upon you to look at your organization and what kinds of expenses you have. If you rely on a lot of 1099 contractors to do work for you, you may want to look at some of the other programs that can support the costs associated with those 1099 contractors. So again, it's everybody needs to kind of assess themselves, their organization, the types of expenses, and then we can better align you with which of these financial assistance programs will work the best for you. Okay. So do we have any other questions about the eligible entities?
I think we're pretty good. I mean, the housing cooperatives, I think, is one that will probably stump people a bit, and some of those other cooperatives. Whereas I'm assuming it includes nonprofits. Is there any additional information that you can give us now about that?
Yeah, I would definitely direct people to the rule. I didn't want to sit here and read. They can get a little lengthy and wordy, but I didn't want to just read them to you. But yes, the rule will definitely break out each of these categories a little bit more and explain them to the extent that you're not quite clear, but they are all included. I was just trying to see if I could pull up the, let's see, like there's the housing cooperatives, as defined by IRS code, not more than 300 employees are eligible. Affiliation rules apply in the same manner. So it's kind of one of those things where it's tiered. It's like you read this, and if affiliation is triggered, then we have to go look at the affiliation rules, which we could probably do a solid hour just on affiliation rules.
We
Yeah.
won't though. Okay,
Yes.
great. That's good for now. People can go and
Yep.
and get more information. Okay, thank you. We can move on.
Sure. Okay, so let's move on to the next slide, please. So let's talk about the second draw PPP loan. So this is where I hopefully will not confuse a lot of people, but the second draw is a little different as far as eligibility for who can apply for a second PPP loan. So there's different criteria. So everybody that was eligible that we just talked about, that those eligible types of businesses or organizations still carry over to the second draw PPP loan, but we also have a few other caveats. So now, if you're interested in the second PPP loan, you also, we're targeting more the smaller businesses that have been more impacted, if you will, than maybe some other businesses. So not only is this a business that fits in one of those eligible entities we just talked about, you also cannot have more than 300 employees. So that's across the board, regardless of what your size standard might have been under SBA size standard rules. For the second draw loan, you cannot have more than 300 employees. And you also have to demonstrate a reduction in gross receipts. And I'm going to talk about that a little bit more for nonprofits as well. But let me just talk about the parameters. So the calculation to figure out how much you can be eligible for under the second loan is largely the same as from the first loan. So for most organizations, it's going to be 2.5 times your average monthly payroll. And again, you can use your 2019 data or your 2020 payroll costs. There is a cap on the second draw loans of up to 2 million. So it's 2.5 times your average monthly payroll costs, up to $2 million. If there's anybody, I'm not sure, there might actually be a few people that fit into the NAICS code that starts with 72. It's accommodations and food services. Because that's been among the more of some of the hardest hit industries, for the second draw PPP loan, they can actually use a 3.5 times multiplier. So 3.5 times your average monthly payroll costs, again, up to the $2 million mark. So how you
confusion. Oh, yeah, there's just quite a bit of confusion. Are you going to go into how to calculate the payroll? People have a lot of questions about which quarters they can use, if they're on a fiscal year, how to kind of choose which ones to use.
Yeah, so with the second draw, there's kind of 2 types of calculations you need to do. And I'm gonna, I think actually go to the next slide. So the first thing you need to do is to make sure you're eligible to apply for the second draw. And then once you determine you're eligible, then you can figure out how much you can be eligible for the loan amount. So let's just talk about eligibility to apply for the loan to begin with. So again, we have more criteria. We're kind of narrowing the field a little bit. And I think the stickler is this 25% reduction in gross receipts, right? So the way I tell people to think about it is, if you look at your 2019 financials versus your 2020, just across the board, their summary for the whole year, looking at your gross receipts, if you already have, if your 2020 receipts are 25% less than your 2019, you're done with your math. you categorically, you will fit the criteria to be eligible. Now, if you don't have an across-the-board 25% reduction, that's when we're going to need to break your data, your financials into quarters, and look at the first quarter of 2019 compared to the first quarter of 2020, the second quarter, and so forth. And at least one of those quarters, you have to be able to show a 25% reduction in the receipts quarter to quarter comparison, 2019 and to 2020. I think it's probably safe to say for most organizations, quarter two was the worst. So usually in quarter two, we're finding businesses can easily demonstrate a 25% reduction. So gross receipts, when we're talking about a nonprofit, right, you might be thinking, well, I don't have traditional receipts. So there is those guidance documents I talked about. The second Draw PPP loan guidance document has a whole section about calculating this number. And for nonprofits, it does talk about, it references the Internal Revenue Service Code, IRS code, for nonprofit gross receipts. And it's basically the gross amount received by the organization from all sources without any sort of reductions. So this could include grants. You might receive gifts, dues if you're a membership organization and collect dues. Could be sales if there are any products or services that you sell. It could include things like investment income. If you have an investment portfolio and receive income from that. So it encompasses all of the amounts that you receive from any source. And again, the guidance document walks through that in a little bit more detail and provides a few more examples as well. So that's what you're looking for. And again, I always tell people start with the bottom line for 2019 and for 2020. And if you already saw a 25% reduction, you're good to go. You don't have to do the quarterly breakdowns. But if you did not, you might have to do more math.
Well, it's great to know that the quarterly is an option. A lot of people are concerned about the fact that they received a PPP in the first round, obviously, and they're wondering about how that might potentially hamper this calculation. And then also some nonprofits have received other kinds of COVID-19 relief grants, maybe county-based grants, and they're one-time grants. So including them doesn't really fully reflect the difference in their income and the impact of the pandemic. So just wondering what your thinking is about that.
Yeah, so I know with certainty you do not need to include any PPP funds you received previously. You can, that is one exclusion everybody can make from this calculation. The other, like state-based programs, that's where it gets a little murkier. And so I would look at two things right away, because I don't know the source of some of those funds. Some of them could have been federal funds that flowed down to the state and then they used for a local program, or some could be from a private sector source. I don't really know. So first thing I would do is look at the rules that were associated with that particular program that you received the funding from, and see if they have any mention as far as tax implications and how this is calculated or counted. And if it doesn't, then that's when we might have to come back and read the rules a little bit more carefully to see if your situation is accounted for. And if it's not, then you might want to reach out to us in the district offices, whether it's my team or your local district office, and see if we can get more clarity and guidance. Similarly, if you have a lending relationship and somebody you're already using, you can also reach out to your lender and ask them. So like I said, I would start with the original source to see if they have any guidance on how this is treated, and then cascade from there. We also know that as far as tax treatment, that IRS, I think they have come out, I don't know if the notice has hit yet, but this last round of legislation, at least from the federal tax perspective, had made it very clear that PPP loans are not a taxable event. The forgiveness is not a taxable event, and it does not bar organizations from also making deductions on their taxes from even though the expenses were covered by a PPP loan. So that tax implication has been cleared up. But yes, this is a good point with all these other sources of grants and other financial aid, what that true impact is going to be. I think unfortunately it's not a one answer fits all. We probably have to look at the specific program. So that was very wordy, I'm sorry, but
no, I think that's helpful. And the tax implications aren't as meaningful for nonprofits
right.
as they are for businesses. But so we have a lot of questions about what kinds of documentation are acceptable to show that 25% reduction, like whether revenue report from QuickBooks, that kind of thing. So
sure, yeah. If you utilize, one of the accounting software programs, you can certainly use that and run your reports. If you have an accountant, an outside firm that you utilize, obviously whatever they prepare, they do not have to be audited or reviewed financials. They will probably ask that you sign the financial statement. So whoever is the person in your organization that is authorized to apply for the loan, they will probably also need to sign the financials just as a verification that this is their, like a self-certification that this is accurate to the best of your knowledge, at least. But they will accept them from any source, whatever you have. So. And then the guidance documents do kind of talk about that in a little bit greater detail as well.
Great, and I know we're posting the links to those documents so that people have those handy, and we'll put them in the e-alert that we send out following the webinar as well. So.
Okay. All right. So if we move on, I'm going to talk a little bit about forgiveness, and then I can cut the forgiveness stuff short if we're running out of time. I know we got a lot of questions. So I did want to just say that there has been some updates or some tweaks, and I think most of these are very positive tweaks to the forgiveness process or criteria. So this latest legislation from December kind of corrected some of the things that were in the CARES Act, and the biggest thing is that the EIDL advances no longer need to be deducted from forgiveness. So if you were an organization that also received an EIDL advance, last summer, you no longer have to, that amount, let's say you got the $10,000 EIDL advance, that $10,000 is no longer deducted from your forgiveness. So that's a great thing. And similarly, if you've already applied for forgiveness and had the EIDL advance deducted, no worries. SBA is going back, and we are going through all of the people that fit into that category, and SBA is reimbursing the lender so that the lender in turn then can eliminate, assuming the only reason you had a loan at the end of this was because of the EIDL advance, your loan then will be eliminated and you will be at 100% forgiveness. So this process is going to take a little bit of time, so I just do urge some patience, but SBA is going back and reimbursing the lenders because we are now able to do so with the new legislation. And again, we just talked about the IRS rules, and then this says coming soon, a simplified forgiveness application for 150 or less. It's already here. So yes, we do have a new loan forgiveness application for anyone who receives a loan of $150,000 or less. You have a very streamlined, it's basically one page of summary details, and that will make your forgiveness process hopefully a little bit more straightforward and easier for you to manage. I actually have a slide. If we can go one more at least. I think the next one is actually, so here's a quick summary of the guidance documents too, but yeah, forgiveness. Oh, sorry. So this is just a summary to date of what's available. And again, this is those two, how to calculate your first draw, how to calculate revenue reduction and max amount. Those are the two documents I really recommend everybody take a look at. So the next slide, we have a list of all of the items that are forgiven and the 60-40 split. We've kind of already talked about those criteria, those categories. So I'm going to go to the next slide and talk a little bit about the process. So the process overall is remaining the same, meaning that you will, whenever you're ready from your first draw or through the second draw, when you're finished with utilizing those funds, you are still going to submit your forgiveness applications to the lender. Some lenders, again, have automated this process. Some are accepting paper. You will submit your application for forgiveness, whichever application fits you. So if it's $150,000 or less, you can use the streamlined application. If not, there are other applications you can use. That plus your supporting documents. And in this case, the supporting documents are the documents that are going to verify how you spent the funds. So payroll costs, it can be whatever documentation you have to support that. So if you use a payroll service provider, they can usually run reports for you for your covered period to show how much you paid out and to whom during that period. If you do your payroll internally, it can be things like even as simple as copies of checks, voided checks or cash checks. It can be bank statements to show money, that went out and to what employees. So whatever you have for your organization that proves that you paid people during your covered period, that's what you're going to utilize. Similarly, for the non-payroll costs, whichever of those categories that you're going to utilize, utility bills are usually pretty easy, for example, because you usually get a bill, whether it's online or through the mail. And then you can show like copy of a canceled check or a wire transfer or something to document you paid the bills. So during your covered period, you're going to have to demonstrate the proof of what you're counting to show how you used those funds, either and again, it can be for costs that you actually paid out during your covered period or that you incurred. It doesn't have to be both. It can be costs you paid out or costs you incurred. And you're going to submit all of that to the lender. The lender is going to actually do the review and make the decision on the forgiveness, whether it's all forgiven or a portion thereof for some reason. The lender then forwards all of that information to SBA through a specialized portal. And then the SBA is not necessarily going to do a review of this documentation. Now, we always reserve the right to review any applications, that it deems necessary or wants to, but for the most part, we're relying on the lenders to make the decision. So that is another reason to try to have good communications with your lender to the extent you can. But SBA then will take in this information, process it, and it will remit payment back to the lender. When the lender receives that payment for SBA, that's when they will go back to you as the borrower to say, okay, you've got 100% forgiveness. You are good to go. Or if something was not forgiven or a portion was not forgiven for whatever reason, the lender will then provide you with loan payment terms. And in the next slide, I do have just a quick overview of the 3 documents, or the forms, I should say, that are available for forgiveness. You'll see the 3508S is the one for anybody who's got a loan of $150,000 or less. There's also the 3508EZ and the 3508. So all of these forms have been updated to accommodate the changes that were made with the Economic Aid Act passage in December. So, and they also have instructional documents with them as well. So I would take a look at that if you are someone who is in the forgiveness phase from maybe your first draw loan or in anticipation of applying for forgiveness in the future.
So I think available. It looks like they're all available on the website.
Yeah.
Great.
And I think my next slide is my closing slide with info. Oh, this is my example. Sorry. So I realize this slide is horrible to look at and violates all the PowerPoint rules, but what I wanted to do is I basically cut and paste from the first guidance document to show you an example for nonprofits, if you're a 990 filer, how to walk through the steps to calculate how much you could be eligible for under PPP. So again, it's really looking at, you'll see the first step is to basically compute your payroll costs. And again, this example is 2019, but you could be using 2020 data. And it's basically to look at, add up everything that fits under the payroll cost bucket. And this tells you, if you are a 990 filer, where you can grab some of this information off of that form, or you might just be using your internal records to grab this information as well. So your wages, any compensation paid to employees up to that $100,000. If you pay employees more than $100,000 for the year annualized, you just need to cap it at $100,000 for this math equation for this purpose. If you have, you can include the information for the 941 on taxable Medicare wages and tips. Any contributions that you as an organization make to group health insurance or other benefit programs, and then also taxes that, well, you wouldn't have paid taxes, but you might have taxes assessed on your employees. You can include all of that in your calculation for your 2019 or your 2020 payroll costs. You will then take that number and divide it by 12, assuming you were in business for all 12 months. If you were in business for less than 12 months, you will divide by the number of months you were in business. And that will give you an average monthly payroll cost. And then you're going to take that number and multiply it by 2.5. 3.5 if you're doing a second draw and you operate under NAICS code 72. But for most people, it's going to be that 2.5 multiplier. Step 4.
Oh, Julie, just before we get, so you mentioned that people could use their 2020 payroll. I mean, we've got a question about, people want to apply for the highest amount they possibly can. So if their 2020 payroll is higher, they can use those numbers instead of the 2019.
Yes,
Okay.
they can.
Great, thanks.
So step 4 is included in the documents. It's going to apply to very, very few organizations. So this is only the organizations that might have gotten the EIDL loan pretty much the first week the program existed, before PPP was ever created, before the CARES Act. There is an opportunity to kind of refinance that EIDL loan under this, but like I said, that's going to apply to very, very few organizations. So really you're looking at steps 1 through 3 in order to do your calculations for your payroll costs. The next slide is is an example. And again, it's from these guidance documents for non-990 filers. You'll see that it's the same types of expenses, but where you get your information may vary. And for each organization, they might have slightly different resources. So where you're going to gather this information, it might be a little bit different. Obviously, you're not going to have information on the 990, so it'll be up to your internal resources and how you track some of this information if you have employees. And I know we're getting close to time here. So the next slide, I think, is just my final slide with our contact information. I realized I did not update this for all of California. This is for San Francisco, but wherever you're located in California, you definitely have an SBA office to service you, and you have lots of local resource partners. So the website I would recommend that you go to find your local district office, if you don't know who that is sba.gov/local-assistance. So sba.gov/local-assistance. And you can use the geolocator to find your closest SBA office. So.
Great, thank you. Well, we do have a lot of questions and I want to get to as many as we can, but I want to start, and I do want to say that in our final slide, which we'll get to in just a minute, we've also got the LA district office contact information up. So that'll cover at least 2 big metropolitan areas. So I think the biggest question that we have, the one that we've gotten the most concern about is, do people have to be in if you're applying for a second draw, is it okay if people have not processed their forgiveness, approval for their first?
Sure.
PPP?
Yes. The only requirement is that you've used all the funds from the first draw loan before a second draw loan can be dispersed to you. So you do not have to have completed the forgiveness process. So no, that's a very good point. Thank you for that question.
So it doesn't matter where they are in that process, if they're waiting for approval, or, I mean, for some people, they haven't heard even from their lender on the first PPP to engage in first approval. Forgiveness approval.
I will point out, because I've already had several emails this week about this issue, but if you had applied for forgiveness and it's with SBA and SBA hasn't reimbursed the lender yet, and you're now applying for your second PPP loan, if that is in processing, some lenders, and this is a unique circumstance, this is by far not applying to everybody, but there are some lenders getting a message back from SBA saying there's a hold on this loan. So what that just means is that SBA is wrapping up on something with the forgiveness, and it'll then issue the authorization number for the second PPP loan. It is not an indication that your loan is being declined necessarily. I know I had at least 2 people that had messaging from their bank that they thought they were being declined. I'm like, no, 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 this is just a situation where they need a little bit more time because they're still processing something and they wanted to finish that piece so that they can authorize the second loan.
Okay, thank you. And then could you just go over very briefly the loan terms? So if there's, hopefully people get 100% forgiveness, but if they don't and they've got a portion left, what is the term of that loan?
Right, so the interest rate is 1% and the loan term is 5 years. And again, when you apply, this is a situation where you will not be asked to commit any collateral. There's no collateral requirements. There's no personal guarantee requirements with this program. And there's no fees. So another good point, if anybody is attempting to charge you a fee for applying for PPP, you tell them no thank you, and you please let me or any of my colleagues in district offices know, because nobody should be charging any fees to access this program whatsoever. They should not be passing on any expenses to you to access this program. But yes, if you do have a loan at the end of the day, it'll be at 1% interest rate and a 5-year term.
Okay, thank you. And we still have quite a few questions about the gross receipt term. That's not, people use different terminology. And I think, can you just define that compared to gross revenue? We also have a question about, can nonprofits use accrued revenue instead of receipts for gross receipts calculations? Because that is more what is being used in their audited financials.
Mm-hmm. It's the information, I don't have that one printed out, but it's the PPP guidance document for the second draw kind of repeats some of what's in the IRS code. And that's kind of what they've based the definitions on. And it does get a little bit more detail in there than I provided. But basically, they're looking at the gross amounts you've received from any of the sources without subtracting out any deductions, except for the PPP loan. Of course, you can subtract that out. But looking at revenue, money that you've received in from any sources before you take out any sort of deductions or make any sort of reductions. So accrued, I'd have to go back and read the rules. I might have to even look at it with the IRS rules at the same time, which I don't love reading IRS rules, but yes, we have to probably go back and look to see if there's a distinction made between accrued. I have to actually go back and look at the IRS rules because I don't know off the top of my head.
Well, it sounds like that information is also available on the website and as part of the guidance. So we'll provide
it cross-references at least, I know it cross-references at least one section in the IRS code. So we might, if that ends up being an area that is not well explained in the guidance documents, definitely let us know at SBA, and we can elevate that as a policy issue to our team in Washington, D.C. as well, because there might be global implications for people.
That's wonderful. We really appreciate that. I mean, we know that one of the big advantage of these webinars is that people have the benefit of information from you, and nonprofits get to hear from you with your expertise. But another benefit is that you also get to hear from us about what
absolutely
are. So we have a couple of questions that are probably more for First Draw and first-time borrowers. Can the PPP be used for new positions?
I guess I'm not entirely sure what they're asking for. It says when you get the funding, your funding is going to be, your average payroll cost is going to be based on 2019 or 2020. So the assumption with the program is that we want you to keep people employed. So if you've had to let people go for any reason, you can bring them back with this program. If they choose not to come back and you want to hire a new person because you still have a need, you may do that. So it counts new people in the sense that whoever's employed by you or going to be employed by you during your covered period, yes, you can use the funds to cover their payroll.
Okay.
I don't know if that answers the question, but.
Okay. And then if in calculating the number of employees, conditions have changed a lot for organizations. If they had more than 300 at one point and now they've got less than 300 and vice versa, can they still apply?
So remember that number, I mean, there's two parts to look at, right? So there's determining that you're a small business and that you qualify. So if you are, whether it's first draw or the second draw, obviously everybody has to have 300 employees or less. So there's that element of it. And for the second draw, it's my understanding they're going to look at employees, your head count, if you will, on the day that you are applying for the PPP loan. Okay. So however many bodies you have employed on the day you apply, for purposes of meeting that 300 or less employees threshold, it's my understanding they're going to look at what you've got today, because that's like a size determination, if you will. But number of employees for purposes of how much money you're receiving, remember that's based on your average payroll cost. So that can be from 2019 or 2020. I know that gets a little confusing, but two different types of number of employee or head counts you might be looking at.
Okay, but number of employees for the purposes of qualifying for under the eligibility requirements is the day they apply.
Yes,
okay,
that is my.
I think with that we're going to stop. We've got about a minute left, and I want to be respectful of everybody's time. And I know we didn't get to all of the questions. We will do a follow-up email that will include a link to the recording and also to the slides, which we also sent previously. We'll also have some additional resources in that e-alert. Julie, I want to thank you so much for your time and expertise. I really appreciate you doing this, not once, but twice. Very grateful. And I also want to thank our captioner today, Annabelle, and also thank our wonderful tech team, Christina Dragonetti and Christine Metropolis. And we can also just want to give you a little bit more information in our final slide. Again, you can see that we've got the information for how you can reach out to Julie's office, the San Francisco District Office of the SBA. We also have information there for the Los Angeles District Office. And then also wanted to encourage you, if you're not already a member of Cal Nonprofits, we'd love to have you become a member. And here on this slide, we have a lot of reasons why you should. And we've got information about Karina Paredes Arzola, her contact information. She is our membership guru and would be happy to talk to you more. So with that, we want to thank you. You will get an email from us by the end of the day on Monday. Thank you so much, everyone. Have a great afternoon.